Martin from Sikich, the channel for learning about trading and investing. Welcome to quick market analysis for tomorrow, May 11th, Thursday, 2023. As we do every day, we will be analyzing the technical charts of both indices and try to understand what happened in the market today and learn something from it and plan for a better trade for the next day. So let's get on the charts. This is the Nifty 50 charts that you see. Absolutely fine momentum, and we have a close above the previous day's close and green but indecisive candle with a very long wick size indicating the support of the bulls out there. That's an Nifty. This is Banknifty, right? It's also absolute good momentum trend, everything is bullish, and you have a candle similar to, almost similar. Nifty, you can call this is more of a doji, indecisive doji, or a hammer, or a reversal wick, or whatever you call it. So this is also a pin bar or a doji. So any small body candle with a long wick size. Any small body is indecisive. First of all, a long wick size indicates a support, and whenever there is no wick on the top, it becomes hammer, right? So small body indecisiveness is seen in both. And wick size indicates the kind of recovery of the V-shaped volatile move that happened intraday and support on the. So everything looked fine. That also managed to close above the previous candle, so close. But it is below the previous swing high, while my Banknifty is much more closer to the previous swing high that was made yesterday. Both have managed to close above the 18,300, which is very bullish. 43,300 also in the case of Banknifty. So it's a less than 0.5%, like 0.33 and 0.27 kind of moves, 50 points and 130 points in Banknifty. That's the kind of move that happened, but finally it managed to recover, is what we can see. It's indecisive dodging, a green close, and a volatile day. Right, indices. So the green close and the close above 18,300 is bullish enough. Right, because yesterday's candle was a bull trap, and then it did not further go below that to make another. Actually, it did go below that previous candle's low. So it actually trapped the bears today. Yesterday it trapped the bulls, and today it trapped the bears. Basically, that's what has happened. So the things are all remaining in this slide for several days, because it's broken out of the trend line channel, taken out previous swings, and CIP bonds changing polarity with the previous support, previous resistance acts as support, and then bonds happens. All these are there in the indices, and the inverted head and shoulder breakout in the daily chart is seen, and weekly also it's very much evident. You can see that it's clearly having an inverted head and shoulder channel. And the trend indicator and the momentum indicator, RSI and trend indicator ADX, both having bullishness in the short term. And there is also a divergence of the momentum, which is bullish in nature, on the same Banknifty. That's in progress, confirmed. And the index is about the 20, 50, 100 to 200 are the major expansion moving averages. And the expansion is what is happening in the Nifty. But contraction, consolidation is what is shown in the Bollinger Bands and Banknifty, indicating some side moves on the short term on Banknifty. But it's expanding, and then bullishness is there to continue, is what Bollinger Bands indicate. Index still remains below the 15, 13.2 is still, you can say it's a large, but it's a substantial 20% plus up move, 20% up move that has happened just in the last 7 days in the India weeks, after hitting the 10.5 or 10, less than 11 kind of historical low weeks levels now with respect to 13.2, but regardless it's still in the low volatility range. Now the greatest thing for the bulls is that they find some buyers for the 10th day, and today also they are buying big. They bought big, 1,833 crores in the cash market. Buying is happening. Analyzing the industrial sectors, FMCG, pharma, realty, all of them are in bullish momentum, and IT and metal media is a sideways momentum. The industry heavyweights will contribute max to the Nifty 50 index. That is a Bank, Reliance, TCS, all of them on the short-term bullishness in the momentum perspective. And the strict remains maintains a sideways. It's only the INFI which is struggling to climb into the sideways after the setback on the Russell's outcome. Open interest PCR for tomorrow is crucial because it's expiry day, so it also is not exactly bullish, but closer to the bullish, as you can see. Futures is a long build-up, so it's bullish definitely. So most of the factors looks to be very much for the bulls, except the fact that there is indecisiveness, right? And and you have even that the US Fed event that's going to come. So what's in terms of the US? The indices has formed the indecisive candle ahead of the major US inflation data outcome event. And that's kind of a concern. Banknifty is showing some kind of sideways moves on the volatile bands. It's really getting contraction. This looks like it's a little bit exhausted. Today also both the indices did move, close down and track the bears, and then came back from there with the fire buy. So that's these are all factors that we have to consider from a bearish perspective. US market is at resistance, it's red since last 2 days, and then it is on the top of a descending wedge, and it has been struggling to break out from there since very long. So conditions until then, there is a very chance that a reversal from the wedge top is quite much possible. India weeks, that is another thing. In the last 3 days, it's spiking a bit despite the fact that the market is up. So it's a 3% today, even when the market is green, right? Less than 0.3 kind of percent. Still, so VIX is rising up even when the market is rising up. So there's some divergence that you have to be cautious on that. The divergence could be the fact of because of the event that's said tomorrow, but it has been building up since the last 2-3 days. And it could be that the move that has happened may not sustain, is what VIX may be indicating. Not necessarily. There's no proven theory like that, but this is a divergence from what normally happens. The spike from the 20% spike from the last 7 days in the India weeks, despite the fact that the market has moved more than 1.5%, is something that's a divergence for clear. Rupee is not depreciating because they are not close to 81.9. Not close because then our price is seen closer to 82 itself, and then that's not too far from the all-time high. So weak rupee, despite the fact that the dollar index gained some strength, depreciated a little bit, even though the rupee has not done that. And the crude oil is has bounced up 13-14% last week and is climbing towards the top of the wedge. 33.4 is a concern. It's a 14% spike that happened in just 2-3 days, and the momentum gain has happened on the crude oil. It's a concern, right? Along with the weak rupee, if the crude is spiking back to the 90-100 levels, you may have trouble. Something to watch out for. Something in the favor of the bears for now. So let's just summarize after we analyze what's in favor of each of them. What exactly happened today is it's a strong FI buying that we have seen since last 10 days. Today also the same 1,800 crores of FIs. It was selling on the ideas of the profit booking that would happen actually. So the wick size indicates that clearly. The small body, that's a concern. It's indecisiveness ahead of an event. And intraday was very choppy. It was up, down, V and inverted V's, and then So VIX is spiking, as I said, it's a concern. However, it is a green close and good recovery, good support from the downside. All the bank is showing some exhaustion after the rally. So CNP bounce is otherwise in progress. Divergence, bullishness in the bullish move is happening in the Banknifty. Previous swing highs are taken out, and the rally continues. Right? And now the rally would be a rally towards the all-time high, so it may have some consolidation prior to that, and otherwise the bullish momentum trend and got a hand and shoulder breakout, trend line channel breakout, all in favor of the bulls still, and market view remains mild bullish. And as long as 18,000 and 43,000 is held, things should be fine. Actually, the fact that the outcome of the US inflation data should not be contrary to what the market is expected. So this market is at a crucial resistance zone, remember that. So some other market, you have to be cautious on that. So that could be the reason why the VIX is spiking, even when our markets are going contrary to what the US markets are doing. So it's an expiry day tomorrow. Volatility, depending on the outcome of the inflation data, could be there, but the levels per away and open interest data is bullish. The levels that we could infer is 18,000 and 18,500 for tomorrow. Nifty and 43,000 and 43,500 on the Banknifty. In the medium term, otherwise 18,500 and 44,150 is what all-time high levels. That's what the levels of resistance. Upside downside 17,500 and 40,000 will be the supports immediate that you can see from the medium term. So that's it. Mild bullishness remains, but you have to be cautious. There's big spiking. There's the US inflation. Data output is coming as US market. It's on the top, resistance on the top of French, and there is Banknifty showing some weakness. But despite all this, there's strong FI buying since 10 days. If it continues, nobody can stop Nifty from reaching the all-time high. So mild bullish view remains, and if this video has helped in getting some clarity on making a trade plan for the next day, in some way it has helped you, then please subscribe if you're not subscribed, and share to your friends and colleagues, and like if you like it, and then and click on the bell button and do all those things. We appreciate your help in this regard because I have very few subscriptions, right? And always protect your capital and do the portion sizing properly, reduce it when it's spiking more than 20, and it's expiry day, so how you have to play the expiry is either 0 to hero trades on the option buying side or sell out DMs on both sides with hedge portions. Always have portions hedged so that you know what exactly you'll be losing in the worst scenario, and your capital will protected. You can still be in the game for another day, even if everything goes against you tomorrow. And so protect the capital. That's really risk management, only thing that's in our hands. First resolve, markets can surprise you anytime. Right? So that's it. Happy trading, happy learning, happy investing. If you're interested in the Telegram channel, click on the description and then click on the link, and you can get that. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.